Thank you for joining me here on Commercial Property Club. My name is Ola Ibiwoye. Today, once again, like we always say, we bring valuable knowledge to informed investors here at Commercial Property Club. It's another edition of our podcast show today, and we'll always bring in experts, professionals in the industries of apartment syndication, or rather some other income-producing property like retail apartments and likes of your warehouses, also to our medical buildings also too. But today we have a profession in the aspect of apartment income producing property, somebody that has really said it and done it and belongs to a private equity or private firm called JT Capital, actually a private real estate company that specializes in multi-family investing. They've purchased well over $500 million of assets, successful multi-family property using time data approach to build relationship, to work the entire cycle of syndication, and ultimately giving great investment opportunity to their investor. Her name is Puja Talati. She's a founding partner of JT Capital. He's also heading the aspect of strategic marketing and operation in JT Capital. Well, I'm going to give you a little biography of who she is. She has experienced in that aspect, just like I earlier on said, the $500 million acquisition of real estate asset. She has expertise in marketing, strategic growth in all diverse ways of planning in the aspect of income producing property and apartment property, asset management also too. She's also full of innovations within the aspect of the operations of the company. Well, before then, she was a former manager at Hershey's company, where she managed and market icon brands such as Hershey's Kiss chocolates. Some of you that have sweet tooth, I'm sure you know what that is all about. Achieving above growth target for the about 500 million brand of Hershey's. She's also led 2 brand launches as an experienced marketer. Building brands internationally is within the scope of what she's done in the past. Prior in marketing, Puja was a management consultant with Deloitte Consulting, where she worked in numerous industries and service area, including post-margin strategic planning for future Fortune 500 banks. Puja finished from Duke University. Yeah, she's got an MBA. He also went for marketing in Carnegie Mellon University. Talk about having the stripes, having their colors. She has it all. So without no further delay, I'm going to bring on board today Puja Talati of JT Capital. Puja, how you doing today?
I am good. Happy to be here. Thanks for having me on. Awesome. We have no doubt that you're going to add value to Commercial Property Club podcast today. It's good to have you. And talking about income producing property in commercial real estate, actually, there are various class assets out there, just like I already said, and which you know also too. But specifically, apartments, that's your area of specialty. Yes. How did you start in real estate? Okay, so a little bit of a different way to get there. I originally was in consulting, and then I worked at the Hershey company. And at that time, I had moved and I was consulting for them while I was looking for my next job. My brother was already in real estate, and he said, why don't you come try this out? We need someone with marketing experience. And I said, okay, I've always wanted to try it, but I can only have one full-time job, and I had a kid too. So I left the corporate world, decided to try this. And I said, if it doesn't work out, I can always go back. And here I am many, many years later. And I like what I do.
Awesome. It's so important to like what you do. And being in real estate, it's fun sometimes. Most of the time it's fun. Sometimes you just you run into a situation that challenges your skill set. And the topic we're talking about, like I said earlier on, is got to do with ways to implement strategic marketing and operation in apartment syndication. You're not new to marketing. You've done it all in several aspects of other industry. You're doing it. You've done it in apartment syndication. You're doing it right now. What can you say about apartment syndication from your years of experience? Let's start with that before we dive into the details of marketing.
Just in general?
Yes, in general, yeah.
I would say I wear many hats. And it actually is translating really well from my consulting days where, you had to go on any different industry and any different service area, and then you just had to figure it out. When I was in marketing, we owned the P&L as the brand team. And so you had to connect with supply chain. You had to connect with, the customer team, the retailers. And so you were just basically managing all of that. In real estate, it's really not that much different. I focus a lot on the asset management side of things. And so I'm dealing with the property management company. I deal with the construction side, the lenders, the investors. And so you wear many hats and you have to pivot a lot. And I think you really just need to be agile and flexible. And what may have worked a year ago, it doesn't work now. And then you have to figure out, okay, what can I do to fix it so you can move forward?
Awesome. Many hats in the same space of apartment syndication. So what can you say about strategic marketing? How does it play in apartment syndication?
Yeah, so I think having a strong marketing plan at your properties is really important. And typically the way that we do it is our property management company handles a good portion of the marketing. So before we get a deal, we sit with them and they, recommend to us, hey, we should be on apartments.com or Zillow, or we need PPC, which is the Google campaigns. And here's how much people are spending in this market. This is what we think our budget should look like. And then you have brochures and all these other touch points, right? It's all very important. And I think one thing that sometimes people may not spend on is marketing, right? Because your budgets are tight and you want to make it work, but you really have to know if people aren't coming in through the door, it might be because they don't know about you. So one of the first things that we do is we set up that budget and then we analyze it throughout the year, honestly, sometimes on a monthly basis, and just having all of that reporting. And I would say there's data is king, right? That's what you can see. And that's where you can pivot. And we've actually done that quite a bit. Last fall, we kind of just re-looked at and revisited all of our marketing at the properties at a very detailed level.
Okay. Hello?
Oh, can you hear me?
Yeah, I can hear you. Oh, sorry. So it kind of broke up a little bit there. Awesome. So, you've that's strategic marketing in apartment syndication. And just to a little bit go deeper with that, can you tell us ways you have implemented strategic marketing in the past that made apartment syndication investments profitable for investors at the end of the day, that says that, okay, we took this particular deal, we syndicated it, we marketed it. This was the marketing plan we specifically used. And this was the profitability at the end of the day. The implementation.
Yeah. And so I'll give you the example that we used last fall. So this property, we still have the property, we haven't sold it. But what we were seeing is a little bit of slower leases. And so our occupancy was starting to go in the direction that we don't want it to see. So we immediately started looking at a few things. The very first thing you'll start to look at is, okay, how much traffic are we getting to the property? How much are we getting to our website? So all of those touch points, you get all of that data and you start to compare it to historical data and see, okay, what has changed, right? That's your very first layer. If you're getting a lot of traffic, but then you're not seeing the conversion, then it's a different problem, right? So this was to really just understand what was the problem. Was it a conversion problem because we're getting the traffic and then maybe we need to switch the way that we close somebody? But what we were finding is we were just not getting as much traffic. And then the next thing is you'll compare it to your comps in the area and then the market to see, okay, what's going on? Is everybody else slow? So then you know, is it a you problem or is it a market problem? And you really have to ask all these questions to really understand what to do. And what we found is that some people were getting the traffic and some people weren't. And then we also looked at apartments.com, our PPC campaign, and again, compared those results with what we're seeing with the market data. It was performing well. We increased it a little bit, and you only want to do certain changes. You don't want to do everything at once because then you don't know what variable worked, and you want to be very frugal with how you spend your money, right? So try one thing, see if it's moving in the right direction, then maybe you don't need to do the second approach. First one wasn't working. Okay, maybe pare that back and now try number two. So that was one thing that we did. We looked at our robust campaigns, maybe increased our budget here and there. The other thing that we did was we actually did do a special, and some people in the market were doing just a little bit. And we said, you know what? We just want to capture everybody and not give them an opportunity to consider another property. Now, this is, what we call that war, right? The pricing war. You don't want everybody in the market doing that. But sometimes you have to, right? And you have to look at the long run and say, okay, if I don't get these beds filled, what's that going to cost me? And is it better to give $100 off, right? Or 200 or however much you need it to, but now you're going to save so much money on your vacancy. So we kind of looked at that and calculated that and really just projected it out to see, okay, what does that look like? So as you can see, a lot of it is whatever our decisions are made off of, we make them off of data. And what we did find the result for that was that we started this early, and for the last probably 4 or 5 months, every other comp in that area has a special except for us. And so to me, it shows that we fixed a lot of the things early on. And I think the rest of the market is kind of playing catch up, but we're able to just maintain it. The other thing that we did is we put extra signage out. So this is kind of getting into the grassroots marketing. Our property manager is amazing. She would start to go to all the local businesses a little bit more, hand out flyers, hand out things, do cross marketing. So there's a Wawa, which has really great foot traffic. So she just said, hey, can we put this here and we'll promote you guys at our property and vice versa. And she's done a lot of that. Heavy reach out to all the corporate areas with building that relationship. And so we also said, okay, let's up our social media game. Let's make sure that we have the virtual tours set up on our websites, make sure that basically our leasing would be open almost 24/7, right? Because we have the lockbox where anybody can go tour. You give your ID and they can go tour a unit. So we wanted to make sure that we were catching every single possible person and not turning them away because maybe the leasing office isn't open on Sunday. And we just went full fire and thought about everything that we could think of under the sun. And I have to tell you, it really turned everything around pretty quickly. You can start to see it going in the opposite direction. And now, it's just being maintained. And then also, Google reviews, all that stuff matters. We make sure we always respond. We make sure we ask when anybody on site, the staff has a positive experience, they ask for a positive review. And so just really thinking through all the touch points for a prospect and a current resident goes a long way.
Awesome. What a great implementations you guys have, and talking about the aspect of having social media. You talked about also you using the social media aspect of things. the aspect of using social media as marketing tools, how have you been able to use it to raise money for apartment syndications for your deals? How's that been effective?
Yeah, so because we actually don't use social media to actively promote any of our projects, but what we do is, it's all about connecting with investors, right? And so it's just being more active on LinkedIn and then just thinking through what is your company and what do you want to do? And maybe you start with one and do it really well as opposed to spreading yourself so thin. But Facebook's always great. There's so many Facebook groups. Some people use Instagram, but I think it just depends on who your audience is. Twitter has worked really well for us. And so we've used Twitter to just, share either our experiences or, hey, this is how you can do this for, people who are looking to get into the business, and then just building relationships. So organically, just by having conversations with people, they see you as like a thought leader. And that's how it starts to build. And then honestly, a lot of it is just word of mouth. One person has a good experience and then they tell their friend and then we meet them and then it just happens organically. But there's the tool of social media. The power is you're just reaching so many people all at once.
Yeah, absolutely. What a powerful tool these days, So practically, I would allude to the fact that, you're using 506 D, I believe. Mm-hmm. Can you hear me?
Yeah, I can hear you. Yeah.
Yeah. I said, in terms of syndicating your apartments, I would assume you're using the 506 B aspect of things.
Yes.
Okay. Awesome. Now, how have you implemented strategic operations after an acquisition of an apartment like you closed this week? What kind of time do you put in place? How does your team move in for strategic operations of taking that apartment through your business plan?
Great question. It's a lot of work. And this is where I feel like I wear many different hats. So one of the first things is before we even acquire, we're already talking to our partners on what our plan is going to look like, what's the business plan, and just trying to get a handle and getting that so that we can hit the ground running. Usually, the first couple of weeks, it's always the transition with the on-site staff getting to really know the property, but also that's where you probably uncover a lot of the cobwebs, right? Things that you just don't know until you take over. So you have to be okay with surprises, and then you have to learn, okay, what do I need to do so we can put that behind and move forward? So, we do a lot of value add. So we know exactly what we want to do going forward when we acquire. I would say, don't reinvent the wheel. Like I said, we do value add. So we'll use a lot of the same stuff we've picked out from a prior project, and just say, yep, we want to use these lights. We want to use these colors. It saves time. You already have an expectation of what the costs are going to look like. And then the team is very aware of it because they've already done it at another property. So that always helps. A lot of project management is definitely needed. And so I do weekly calls with all of the property managers. And, it's important to also take notes. We have a million things going on, and we always reference back to say, hey, what did we talk about 3 weeks ago? What was our recommendation? And then has it happened? If not, why? Right. So it holds us, it keeps us accountable. But yeah, really just making sure that, hey, these are the milestones, and it's almost like just the aspect of project management and keeping everybody accountable for, hey, we need to hit this by this date. We need to hit this by this date. Now, when I say we also wear many hats, some people always ask me, what's a day in the life of being an asset manager? And I say, you know what? It completely varies. You just never know what's going to happen, right? Like the hurricanes, we have a lot of properties in Florida. They just come through. Well, then that totally changes. And then if you're, have this big leasing time, you may not get that because everything is shut down and people are not coming and you have to prepare for that. And so then how are you going to make up for it? And so it's I would say it's always interesting, but you just always have to be very organized, and willing to move and to change, right? And I think one of the biggest things is as you're operating, you always need to look at your revenue and your expenses. Like, is your GPR moving in the direction that you want it to move to? If you acquired a property with really high delinquency, what is your plan to bring that down? And then make sure that that plan is, held to. On the expense side, always revisit, always say, hey, can we get a better price? Have we looked at other vendors? And we've been doing that, especially right now with expenses being, expenses rising. It's like, where can we cut? Where can we do all of this stuff? And you have to really look at it on a monthly basis, if anything, because if you don't, it will start to slip away.
Awesome. Great, valuable advice you're given on how you guys have been doing it. And it's amazing the ton of work that you need to put in when acquisitions are made. And subsequently, just like you say, you stay on the numbers, you make sure you effectively watch your business plan, make sure it corresponds to your action plan. So how do you normally measure success in operations of your acquisition?
I think the success would be, obviously the best is when you're as close to or hitting your pro forma numbers. Now, like I said, stuff happens all the time, right? I think we can all say that no one predicted that these interest rates were going to rise as quickly as they did. And so then it's also just almost like level setting, right? And part of what we're looking at is, okay, we may not be at pro forma at all of our properties, or maybe we're above. If we're not, how are we doing relative to our comp set, right? Because then that's what you can go off of and say, here's what the market is doing. I can't change the market fundamentals in that area, but what I do want to do is make sure I measure up to being at or better in that market. But, we track everything. We're always analyzing, always looking at our pricing against our competitive set and saying, okay, what can we do? Why are we not there? Let's get ourselves there. Or, hey, that's great. Like, can we increase this a little bit more because we're leaving more money on the table? And so we have all these tools set up for us to analyze all of that. And that's how we'll measure, our success. And obviously, once it goes through full cycle, we want to make sure that we hit the metrics at the pro forma at the end of the day.
Awesome. Great value right there. Hitting pro formas is necessary to make sure you make it a successful deal at the end of the day. And coming to that, what is your advice for best practices, strategic marketing and operation for newbies in apartment syndication? What can you say? This is what you guys got to get right. You guys coming on board newly.
Yeah, I would say the first thing is make sure you understand what your plan is. You have to have a plan, like just at a base level of what you're planning on doing. What's your budget look like if it's marketing related? What are the most important things? And just remember, these are the needs versus this is what I feel like it might be good to have, right? Some people will say, oh, it's great. Let's change our name at the property. Well, you probably don't need to. And when you realize that, that's very costly to do, right? And there's a lot of implications. So really focus on hey, this is the absolute most important things for marketing to run the property, and then set deadlines and goals and milestones. If you don't have any of that, it will just run, and then you won't be able to hold yourself accountable or even measure. On the operations side, make sure you have a solid business plan. The more preparation you do early on during the acquisition phase, the easier it is to implement really timely. So for example, if you're going to be doing renovations, have your budget kind of prepared ahead of time. Now, you won't know everything until you actually close, but the more you prepare ahead of time, the quicker you can start your renovations, the quicker your team knows, pick things out earlier on when you're doing your due diligence. All of that stuff saves time. And the quicker you can get your renovation started, the quicker you're going to see an increase in your revenue at the property. So that's what I would say is just really like plan. Make sure you have deadlines set in place to hold yourself accountable, and then review financials, data, numbers to see, hey, are we hitting it? If we are, great, but then how can we do better? So never settle for where you're at. Always ask yourself, like, okay, that's great. Our target was 8 leases, but how can we make it 10? How can we make it 12? And just really push yourselves, because, I think if you continue to push yourself and your team will also have this drive to never settle. And that's one thing I learned is like, everybody, even your property management team and you're all a team, you all have the same goals, but it's always good to just constantly ask them like, oh, well, what else can we do better? And to get everybody thinking in a different mindset.
Awesome. So the key to not settling is what can we do better? Constantly having a plan, having a set goal. And that's what pushes the entire cycle of things forward. So talking about new innovations, we live in a fast-paced world right now, and we constantly see new things coming on board, even within the confines of apartment syndications. As an expert like you, that you've done it, there will be instances that you say that this is a cause for new innovations. What are the new innovations in marketing for your situation of apartment syndication?
Yes, I think when COVID happened, a lot of innovation had to happen pretty quickly, right? People weren't visiting. How do you get people to come? And I think one of the big tools that we've now used is, obviously adding a lot of live videos to the websites, right? So that people can see virtually, and then obviously you can apply virtually, but then also giving access to a unit where they can go tour on their own. And the beauty of that is, we should have been doing that even prior to COVID, right? Because offices aren't closed. A lot of the offices are closed on Sundays, but there are some people who maybe that's the only time that they can come to the property. Now what? And some people, frankly, they just want to be by themselves and tour. They don't want somebody with them. So that was, I think, a really good innovation that was brought into the apartment industry. And I think, I don't know if it's still widely used or if people have kind of gone back to that, but we found great success in that. I think from a grassroots marketing standpoint, building relationships with vendors. So one of our community managers, she built these relationships with the vendors and said, hey, can you sponsor these events? And community events on site really matter. It may not be marketing to prospects, but then it helps with retention and renewal at the property with those residents. And happy residents are also a marketing tool of, word of mouth. And then it's also finding amenities that are not really costly, but are little touches that you can add to your property. So for example, on one of our properties, we're looking at doing those like little libraries because we have a lot of kids there. And just, we see them in neighborhoods all the time and parks. Why can't we have that at our property? It does not cost that much, but it's one extra thing that you can market that you have at the property. We have a lot of green space at one of our properties. Well, let's just put soccer goals there. Now it's another amenity that we can now market that we have, and not everybody has as much green space. So, hey, let's use this to our advantage. So really just thinking creatively of what else can you do to add value to the prospects, but then you can also market that as a unique amenity that most people don't have.
Yeah, awesome. Constant innovation is what rebrands a particular venture, I believe, personally. And, when you're talking about, we're rounding up the show right now, JT Capital, practically, we talked earlier on building wealth for investors through multifamily real estate and the aspect of cash flow, equity growth, and tax shelter, what you will call tax advantages. What can you, how do people get in contact with you? How do people because your thought leader, your platform is a thought leadership as well as also your investors in this aspect of income producing property. How do people get in contact with JT Capital and partner with you?
Sure. So you can reach us at www.jtcapitalgroup.com, or you can also email us at invest@jtcapitalgroup.com.
Awesome. We're rounding up our show today. You brought a ton of value today to this show in terms of marketing and strategic operations in apartments after syndicating them for profitability at the end of the day. Is there any other thing you want to tell my viewers today concerning apartment syndication before we wrap it up?
No, but I look forward, I hope this was really informative, and, I look forward to, hearing from you.
Awesome. This has been a wonderful show with Puja Talati of JT Capital. He's brought value today concerning strategic operations of apartments, and also too in terms of the marketing aspect of things. Just like she said, as you can see, she wears a lot of cap in JT Capital, and she's dived into a lot of aspects also too. I hope today's show has been a ton of value to everybody listening out there. Once again, my name is Ola Ibiwoye. Thank you, Puja Talati, for coming to our show today. Another time, we will be joining you here on Commercial Property Club podcast with another value-add episode. Thank you for joining us today.